I am so honored to be here with Daniel and Caroline and Deanna. I will let them introduce themselves when the time comes. I just wanted to give a few kind of words of framing. Then we'll hear from our panelists. Then what we're going to do is we're going to be basically deriving the agenda from your pain points. And you will have the opportunity to chat with each other about an issue that you feel passionately about. There's a lot of knowledge in this room. There's a lot of people who have a lot of experience in this area, and some people with less experience. But we're going to get to have a meaningful conversation together. So I want to tell a little story about an entrepreneur that I met last summer. His name's Deacon in Gitunguri, Kenya. So, whoopsie, that's not the Deacon. We're going to talk about the cake in a minute. All right, so, whoops, I got to go back. Yeah, there he is. Okay, so the Deacon, like so many other smallholder farmers around the world that many of us have met, really struggled to make ends meet to make a sustainable living. Now he is a customer of Sistema Bio, which is an impact-first company, a social enterprise that offers biodigester technology, technical assistance, and financing to smallholder farmers to enable them to convert waste into clean energy as well as fertilizer. Now, today, not only does the Deacon no longer have to rely on unsustainable fuels like wood and coal, but also he has introduced these really cool specialty mushrooms and other high-value crops that enable him to increase his income by literally thousands of dollars a month. And Sistema Bio, like so many other entrepreneurs in our network, we have hundreds and hundreds of them, and a lot of them represented here through these organizations, you know, are making that kind of impact every single day. That's why we're all here, right? Because we're so inspired by these people who are having such an incredible impact. And while the Global Impact Investing Network indicates that there's something like $1.6 trillion of assets under management in the impact investing arena, many of the entrepreneurs in my network are really, you know, failing to find the right flavor of capital that meets their needs. And as Mark kind of intimated, you know, we identified a number of issues in this kind of valley of death. Now, we're looking at this one valley of death, but what we realize is that there's several kind of valleys of death for social entrepreneurs as they continue on their journey. So the first issue is that the instruments themselves are just not fit for purpose. The structure of the funds push towards a certain profile of entrepreneur that has J-curve style growth, that can deliver, you know, very high margins. And most of the entrepreneurs in our network just don't have, they're profitable and they grow, but they just don't have that kind of profile. The second thing is this, everyone waiting for someone else to go first. We like to say that impact investors love to be the first to go second. Does that resonate with anyone out there? And then the third piece is around this kind of communication gap. So even when people are actually speaking the same language, there's a real mismatch in communication between entrepreneurs and investors and funders of all kinds. So these are the sort of features or drivers of the Valley of Death. And at Miller Center, through our Miller Center Capital, we're taking some steps to try to figure out how to accompany entrepreneurs through that Valley of Death, maybe make it into a little more verdant, green, beautiful valley. First, by introducing innovative instruments that through venture philanthropy model that actually meet the needs of the entrepreneurs where they are. That's the first kind of step. The second one is we're going to go first because we do have relationships, very deep relationships with lots and lots of entrepreneurs. So we can put our hands on our hearts and say we're going to, you know, we know these people, we're going to go first. And then the third thing is through connecting entrepreneurs with each other, with investors at events like this, at SOCAP and elsewhere. This meeting is the third one that I've co-hosted. I did one with the Aspen Network of Development Entrepreneurs. I did another one actually with Daniel. We did one at the Clinton Global Initiative. So we're kind of gathering a lot of data about what your pain points are and what the solutions could be through these exercises. So we're trying to actually build a bit of a community who really cares about this issue, and we'll be inviting you, if you want, to join that community as well at the end of this session. So in our small way, we're trying to do it. We have done 11 transactions, and I'm really excited to say that those transactions have catalyzed 10x, so $10 for every $1 that we've invested in those companies, which is sort of validating that idea. Yeah, thank you. Woo! Very exciting. So validates this idea about going first, right? So it actually, we were able to crowd in some more folks. So we are here to challenge the popular narrative that you can have your cake and eat it too. We believe that there is a trade-off in many cases, I would say in most cases, when you get you veer off of the path of fintech and some other sort of tech-driven business models, that there is a trade-off between deep impact and commercial returns, and we need to reinvent the impact investing ecosystem now, if we want to see the kind of impact that we have. But by moving towards a patient, more risk-tolerant model of capital for long-term impact, we can shrink that valley of death for everyone, as well as creating this multiplier, this massive multiplier effect for impact-first investing. And that is the vision, and that is the hope. So without any further ado, I'd like to now introduce, let's see, who should go first? Daniel. Oh, no. Caroline. So Caroline, why don't you introduce yourself and just give a few words about your experience and thoughts about impact-first investing.
Great. Thanks so much, Bridget. And hearing you speak just reminds me how grateful I am to Miller Center for putting this on a platform that other people can hear, because if the impact investing industry is $1.5 trillion and the world is still getting worse, then we're not doing our jobs. And so that's where impact-first investing is just so critical. The 10x number that you mentioned, Bridget, is really interesting because that is Open Road's leverage as well. And so Open Road, we started off as a family office and have really been driven by a problem, which is unsticking capital. And so as many of you know, unfortunately, our capital markets are inefficient. Talk to an entrepreneur and they'll say, I've got $1 million coming, I've got $2 million coming, but negotiating the legal documentation from our data takes around 8 months. And so how do you keep your high-performing team together while you wait for that capital and then be expected to grow 100% overnight once it comes in? Open Road loans are bridge loans that we make very quickly, so we underwrite in 6 weeks. To date, we've put out around $80 million, and that's kept $800 million of follow-on financing on track across around 150 transactions. Again, just so aligned with Miller Center and really putting impact first. And I do think we need to do some work on defining what impact first investing is as a cohort of asset allocators as well as entrepreneurs. Because what it means is you put impact first in your investment process. And so in our investment process, we have an impact call where that's what we look at before looking at some of the financials. So that's an important piece. When I talk about unsticking capital, 80% of the time we're making loans to covering operating expenses, so literally keeping the lights on. 90% of the time our borrowers are growing instead of laying people off. So we do think there's real additionality in what we do, and I would love to see more focus done on the additionality of impact investments because we think that it's that critical moment of being first or second coming in that can really make the difference between success and failure for these impactful organizations. when we focus on seeking capital, we started really on bridging to financing rounds. There's also moments of growth, like with Deanna, we worked with last year to help fulfill an unexpectedly large purchase order that she got, and she couldn't find bank financing that could fill that. And so we worked actually with the Miller Center's Trust Fund to come together and provide that financing. We think capital is getting stuck other places, so I would love to talk to any of you that see capital getting stuck in ways that just don't make sense. Open Road's original name that we never put out there was the WTF Foundation. And so we just really want to fix it. So happy to talk and to brainstorm in this session.
Awesome. Terrific. Okay, Daniel.
I'm Dan Marker. I lead Halcyon. We are a nonprofit accelerator and investor in early-stage impact-driven startups like B-Girl. And we landed in the investor portion of our work kind of by accident. We started off, first and foremost as an accelerator to support organizations that are innovating in climate, health, and equity tech. But we saw the gap, right? We serve over 70% of our founders are people of color, over 70% of the ventures we support are led or co-led by a woman founder. Everybody in this room knows the stats. And so we had to walk into that gap, right, and created a few vehicles and learned a lot from that. First, starting with a small VC fund, a pilot fund, $5 million to invest directly in founders who had come through one of our programs, then bringing together an angels network of accredited investors who were interested in supporting our founders. And then also starting earlier with a microloan fund where we're not taking any collateral, where we are providing loans up to $25,000, no collateral, no credit check. We've de-risked them by the nature of coming through our program. But over the last few years and in conversations with Bridget and others, really started reflecting on what our sector as entrepreneurial support organizations has transformed into, right? And that we have let the tail wag the dog when it comes to how we think about building companies, and have really tried to create a system in which we are trying to force fit, as Bridget mentioned, entrepreneurs and companies into a model, versus thinking about how we create the right instruments that are fit for purpose for our founders. So really increasingly thinking about what are the kind of ventures that we want to see in the world, what are the kind of businesses we want to see, and then how do we reverse engineer the instruments that we want to facilitate them versus the other way around. Right now we don't have a way to fund a 5X or 10X company, right? That's not what venture is looking for. And one of the things that I would think about as we talk about impact investing needs less cake is also thinking about how we're actually talking about risk and how we're pricing risk. In many ways, we are starving companies at the very beginning, and then saying that they are more risky for having been starved. And then we have this self-fulfilling prophecy that investing in these companies is more risky and therefore is not worthy of the kinds of investments we see in other places. And that's something I really want to address and think about. What are the differences in time horizons we need to look at? What are the differences in the structures so that we can both fund impact and returns, but it doesn't have to be in the same way, in the same models, because we're not going to SaaS platform our way out of any of these crises. So that's what we're focused on.
Awesome. All right, Deanna.
I'm sorry. Well, first of all, everybody, welcome to our birthday party. No joke, we are 10 years old this year. Halcyon Incubator and B-Girl, because we happen to be the first cohort. And that is something to celebrate, honestly, right now that we have the cake, so thank you very much. So my background is in industrial design, and I was fortunate and naive enough 10 years ago, believing that social entrepreneurship was something that you just, this is going to be easy. We were focused on the issue of lack of access to menstrual products for women and girls. And honestly, 10 years ago, I thought, what a low-hanging fruit. Menstrual products for girls, easy. As an industrial designer, I came up with an idea, and I said, okay, right now I just need to make sure that this product gets to the girls. I had no clue how difficult was going to be that journey from the moment that you make a prototype, that you have a product, to actually put it on the hands of a girl. And through that journey, we have seen many things that have been catalytic to the fact that after 10 years, I have the privilege to still be breathing as a company and still be working in this space. And I think a lot of those comes to that type of like red threads that we start like putting along the journey. When we joined Halcyon Incubator, this was just an idea with a pilot. And they bet on us, they put us through their program, link us with people who can help us on making financial plans, making sure that we have the right structures in place. And off we go, getting all our work done on the ground. But then you grow, and your needs also change. They still keep helping us through the entire 10 years of the journey. Access to Deloitte, access to lawyers, access to everybody in the ecosystem to make sure that we could thrive with this. 10 years after, we are right now with like 1 million products distributed in the hands of girls and 500,000 youth educated. But the point that I want to make sure is like, in the 1 million products distributed, we alone can't do this. And it takes, someone was saying this, that it takes a village to raise a kid in one of the previous sessions. It also takes a village to raise a company like this one. So I think one of the things that, when we're talking about having the cake and eat it too, is what is it that we are doing on the ground? And honestly, at which point, like we entrepreneurs, we are facing these lines, we have people understanding at the different levels the things that we need to go through. So just to summarize, at least on my experience, it has been 10 years when we had the opportunity to work with Halcyon, with Miller. Miller Center also put us through an amazing boot camp and accelerator to make sure that we can actually prime our financials. If that thing wasn't in place, we will have never got the opportunity to link with Open Road that actually unlocked the capital that we needed to be able to fulfill those sales. So it's like building those networks that at the end become safety nets for us. And I think that's one of the points that I will really highlight on this opportunity, is like being able to make those nets for us.
Nice, thank you. How many of you were here last year? Were you here with the Frankenstein monster that we brought? So I used to talk, I still talk about this. This year we have a cake. Last year we had a Frankenstein monster. Year before we had a zebra. But so the ecosystem is like this Frankenstein's monster. Each one of us with our own theory of change, our own investment thesis, our own sectors and geographies and stage of development and instruments, and it's just this nightmare for the entrepreneurs themselves to navigate. And so I think what we've been all trying to do is create these kind of seamless sort of continuum of support that's more entrepreneur-centric and less about us and more about Deanna and many of you out there. So speaking of you, okay, this is where things get fun. Not that that's very fun. You were all really fabulous. Okay, so we now have 8 topics, and listen carefully because we're going to have different parts of the room are going to be talking about each of these 8 topics. These are crowdsourced from you. And what we're going to do is we're going to have you go to the different parts of the room that have the topic that most speaks to you, that you want to discuss with your peers. And we're going to discuss 3 things. The first thing is, what is it? What is the problem that we're talking about? Sorry, I'm going to put you through this again one more time. What is it? What's the problem? And frame it as a how-to, or how might we? Problem. Share knowledge. What have you seen that works? Or maybe doesn't work. Could be also. Just share your knowledge. And then I said, let's think about what has to happen next. And like I said, we've done this framework a few times now, so we're gathering a lot of data, and we're going to try to start working on those things that have to happen next with the people who need to be involved. So, okay, diversity and intersectionality is going to be right over there. That's number one, right? Financial instruments fit for purpose in that back corner over there. Patient capital, right, all the way in the back towards near that pillar over there. Regulation in that corner over there. Lack of knowledge, education. How do we educate people about this topic? Fear. Fear, it's too risky, right here. How do we deal with the fear around these kind of things? Alignment between funders and investors, going to be right here. That's number 7. Oh, I see. Oh, this is very clever. You guys all have your little signs. All right, I didn't even notice that. Okay, and then risk versus returns trade-offs is going to be right there. All right, so I know you're never going to remember these numbers, so I'm going to say them one more time. Okay, diversity and intersectionality, right over there. Financial instruments fit for purpose, back in the corner over there. Number 2. Who's got number 2? Who's the... Oh, okay. The green. Okay, patient capital, back in the back there. Regulation in the back corner there with Eli. Lack of knowledge and education over there, maybe closer to here so they're not squished up against him. Fear. Okay, up here. You want to come up here? Who's fear? Okay. Number 6. Who's number 6? Okay, you want to come up here? Yeah. And then alignment, number 7 over here, and then risk versus returns trade-offs right here. Okay, so what you're going to do is stand up and go over to the place that is most interesting to you. We have, and then here's what's going to happen. If a lot of people go to one place, we are going to split you off into separate groups, because otherwise, if the groups are too big, you don't have a good conversation. The first thing I'd like to do is, can we get a round of applause for all of these people and the extra ones that were, pressed into service? Yes, thank you. Really appreciate it. We were just counting, there's more than 100 people who are in the room right now. We were expecting the maximum 80, more like 70. So thank you for your engagement. What I'd like to do is just kind of go around, and I don't think, there's nothing worse than being at a conference and have like a bunch of groups like reporting out. I don't know about you, not my favorite thing. But I think that what could be interesting for folks is if you could just say, what is the problem statement that you landed on as a group? And maybe one example of something that has to happen next. And by the way, just in case people are thinking they're going to take off, we are kind of, like I said, building a community. So if you take a picture of this and I think it's like a 2-question, do you want to, be part of this community? We will collect all of this data. Oh, by the way, I didn't mention this when I was actually asking you all to be the moderators too, that if you would write a few a few notes about the main findings. So we'll put all this data together, combine it with the data from other conferences that we've been at, and then feed it right back out to you so that you'll, have access to all this information, the conversations that are happening, and inviting you to further conversations as they show up. So totally optional, but you are invited. You are absolutely invited. I don't know how many people we have already, maybe about 100. How many people are in that group have signed up for this so far? Jeff, I'm looking at you. You have no idea. Okay, several. Who wants to go first?
It's been a long, we were running a program last week, so my voice is mostly gone by now. We struggled to define patient capital because patient can mean anything from months to years to, a decade plus. And so, but I think in terms of thinking forward, there were some interesting solutions, potentially incentivizing people that have money sitting in DAFs to invest it with a longer time horizon while they're waiting for those philanthropic opportunities. There's an interesting idea that there's potential for fixed income products. This is very data dependent. There needs to be more track record for those to be realistic, but an interesting opportunity. And then finally, aligning incentives for investors, whether it's carry or some other incentive structure in the fund, with them either holding longer on their investments or just creating longer term impact.
Great. Awesome. There you go. Thank you, Herman.
Thank you very much. We have an interesting conversation about, you compliment me if anything's missing, but we play around communication, no? So we define these three how might we's in terms of how might we articulate better, how might we create cohesion within the different terms, the different mechanisms, and how might we make people understand the different layers, no? So we speak a lot of, no, we ended up saying even like, it's a marketing problem. So that was cool, and at the end of the day, we speak, and I try to put it in order in terms of a step-by-step route that we speak about following. And the first step could be like define key principles, what it is and what is not, very clearly. The second, we speak around the importance to be led by principles and values, no? Like put that at first. The third step is to share definition, to share definitions we speak about even having a map of concepts with red on these sides, blue in these sides that make very visible very clearly. And the next steps guide conversation, no? And the last one is to create community, and here we speak about, at the end of the conversation, about how this learning tool of the B Corp certification, this learning process that when you want to certificate as a B Corp, they help you to understand and progress, no? So as a very good example about it. No?
All right, problem solved, sounds like. Thank you. Thank you, Herman and the team. Who else? We have time for a couple more. Okay, over here. And Deanna. Deanna had the monster group, so I think you get the, there you go.
Thank you so much. We've had 3 groups over here. We were discussing about what kind of instruments, and I think one of the biggest challenges that the group spoke about was the diverse needs for creating impact by different sets. Someone may want grant funding, someone may want working capital, someone may want patient capital, and how do you sort of design different revenue models and financial models to suit different types of needs that actually exist in the impact space. In terms of knowledge, we've had foundations who've looked at seeing how they could provide different kinds of capital to the same group, but at the same time wondering, if that was the ethical way to do it. Do you put in equity and do you put in grant funding into the same organization, and is that cheating? And in terms of like action, I think there were some very interesting actions that we spoke about. One, they thought of forums like these needs to be organized, and more funder coordination is needed so that they could understand what are the diverse needs, and then how could they sort of provide for those different types of needs. The other was, could we have guidance for entrepreneurs and what kind of models, etc., that exist that could help them. And they need a first mover who could, inspire others.
Excellent. Thank you. Thank you so much. Thank you so much. Okay, Deanna, I'm going to give you the last word here.
The risk return group, which sort of felt like the cake group. And it was really interesting to note that basically everyone except 2 people, I think, was a funder in our group. And so a big challenge, no surprise here, was fundraising. Why is that? We felt that really there was a lack of benchmarks and really sort of external things, and that sort of allowed the folks who are returns first to really kind of run away with it and want more cake. And I think some really exciting framing that came up was we need to be able to call them impact concessionary, right? Like, they've kind of just like had the runaround on us saying we're returns concessionary, but they're impact concessionary. So how can we get there? In general, we need more proof points. So one idea that came up a lot was carve out a portion of your asset allocation to, build trust with, the investors and the folks that you're working with. Build out proof points. Go to the field if you can. Bring the skeptics with you, because if you actually see who is paying the interest on these things, you're not going to actually squeeze them for it, right? If you meet them in person. And then finally, more education, more cake, more conferences like this, reports, road shows, and transparency reporting. Can we actually collect data about the, can we actually agree upon what the, impact concessionary folks are really doing and what impact they're actually having, and not letting them get more credit than what they're actually doing? All right.
Okay. All right. Well, thank you all so very much. This has been an amazing event. Yeah, we're not going to be able to get to all the tables, I think, is one of the issues. Are you dying to speak? Yes. Okay. Okay. I'm just going to, yes, let's do it. Let's do it. Okay. Take it away.
Thank you, thank you. We just had such a fantastic group, and I agree with everything that's been said, and Herman did a good job. But what we were talking about was the lack of information and the lack of knowledge among family offices and the wealth creators. And one of the challenges, I think, from the beginning is that people just don't know how to start. And the people with the money, and we're not necessarily the billionaires, but regular wealthy people or the millionaires don't know how to start. And even the term impact investing has a bit of a negative connotation. And it takes, I think, Avery said here, sometimes 30% of her time to educate her clients on what impact investing is and the right vehicles to get the conversation moving. So a playbook and guidance on processes and convenings like this to include on stage family offices who have done it well, who can share their learning with other family offices. Thank you, thank you, thank you.
No, absolutely. I love that. It's interesting because I often say I don't like talking about seed, Series A, Series B, Series C, because if you were to ask every single person in this room what is meant by those terms, they would all have a different definition. So going back to all of this communication and definition issues and trying to copy paste, Silicon Valley VC speak and practice isn't working for us, folks. So yeah, we need to completely reinvent the ecosystem.